All right, let's get another check on Intel. Those shares are plunging now in overtime after reporting earnings moments ago. The company beating on the top and bottom lines, but the stock under pressure now at session lows. Now, the stock had been up nearly 50% this month coming into the print. Joining us now is Seaport Research Senior Analyst Jay Goldberg. He upgraded the stock to buy this week. So, Jay, first of all, the rationale behind the upgrade, and what did the numbers tell you, pro or con, that call?
So the rationale behind the upgrade was coming out of CES. I talked to a lot of Intel customers, HP, Dell, Asus, Lenovo, the companies who make PCs, and they were enthusiastic about Intel in a way that I haven't heard them in a very long time, many, many years. Intel has a new line of products coming out based on their Panther Lake series of chips, and those are performative and looking good, and customers like them. Looking at the numbers, I am reminded of my mentor once told me, never upgrade a stock the week of their earnings. Thanks, Brian. The December quarter was very strong. It was better than expected, but the guide is a little bit weak, and especially on the top line. And I'm okay with that, right? March is always the toughest quarter seasonally, right? After, it's the quarter after Christmas, and so things kind of calm down. I'm still pretty upbeat. I'll see what they say on the call. I'm still optimistic that they can recover this because, like I said, those products are coming out this year, and I think that's going to really drive numbers later in the year.
The reason for the shortfall on revenue guidance, Jay, was interesting. Supply constraints. So if you're thinking that this is a sale delayed as opposed to denied, usually investors can sort of look through that. But in this case, they aren't. And I'm wondering what you think, how do you interpret what they say in terms of why there's that shortfall?
I suspect it's the culprit that everyone's seeing right now, which is a shortage of memory, right? Memory is very tight right now. We've seen that in SanDisk and Micron and Hynix. Right, all of the memory capacity is going to AI build out. Those are high ASP prices, so the memory makers prefer those, and so I think that's going to cause constraints sort of across the consumer electronics end of things. Right?
Wasn't that not a surprise? I mean, when you see SanDisk shooting higher, you see Micron shooting higher. You know that they're shooting higher because they are so constrained here. That there's such a shortage, and yet this is a surprise when the read-through is in the Intel quarter.
Well, we'll see what they say on the call because I think there is, even if laptops are down this year, I think Intel numbers can still work because I think they're going to gain back a lot of the share they've lost. They've lost a lot of share over the last 10 years, and they can start picking that back up. So I think the numbers can still work there. I don't think I'll give us all a little pass on this surprise because the extent of the memory tightness is pretty much unprecedented, at least in the last 20 years.
I was going to say it's also intensified in the last few weeks, at least based on how the market's been acting. Jay, I wonder just where the destination is for Intel in terms of this turnaround, this recovery process, the market share story, because the market's given a lot of credit up front, it would seem to me. It's trading at 5 times forward revenues. It's like twice the 20-year average. Obviously, the revenue expectation for the current fiscal year is down from 2022 levels. I mean, it just seems like it's a relatively deep hole, and where can we expect to get to within a year or two?
So if you think back 6 months, there were questions about whether or not this company would survive at all. I was certainly pretty skeptical, and a lot has changed. They have a new CEO. He's doing a pretty good job in making the necessary cuts. They got an investment from the government. So suddenly we're not having existential questions about Intel anymore. And now it's more of a question of what do the fundamentals look like? And I think there are some encouraging signs there. In particular, sort of a silver lining out of today's numbers is about the thing that I think is really important here is the operating leverage, right? They have a pretty high fixed cost base. And if they can just get the revenue numbers working, then I think there's a lot of upside to EPS. And we saw that in their guide sort of in the wrong direction. Their revenues are light, so their EPS is light. But I think when that reverses, as revenue picks up later in the year, I think we're going to see some surprises to the upside there.